I strongly recommend going over to TFNN.com. One, you can listen to us right here. We're on from 9 a.m. to about 4 p.m. Eastern time. But check out some of our newsletters, okay? And the one I'm going to talk about right now is the Opening Call newsletter by Basil Chapman. Basil is, one, he's accessible, right? If you're in the den, you can talk to him. If he's there, he's going to answer. He's always updating this. On the Fridays, you're going to have a very long overview of what went on in the market, what we're looking forward to. Basil has put on some very nice trades recently, ones that honestly I didn't even think to put on. I've been following what he's doing, and they worked. And that's really you only get that from decades of trading experience, right? So right now, let's move over to Basil Chapman. Basil, how are you doing?
I'm doing well, and thank you very much for those kind words. I just want to clarify that today I did, and I'll explain what I did. I did go along waiting for a pullback from the very strong open in the Dow, and we got that pullback, but we got stopped out because I still have pretty tight stops.
Yeah.
And and I'll explain what I was doing. So you're talking about the volatility index called the VIX. So if you look at the VIX had a huge spike. Within 2 days, it went from 31 up to 60.17.
Yes.
Now, if you look at this, I'll just open this chart up right here. This is the weekly chart. You can see these long wicks and a very sharp pullback. Let me scroll across. And most of the time, as soon as the high is made and it hits this kind of trend line here, it would come down very sharply. Then we had that overnight Japan. It was a currency issue, and Japan had this huge spike up at 65.73 in the volatility index back in, I think it was July. I forgot to put the date. Yeah, August the 9th, the week of the 9th, and then it pulled back very sharply. And what I was looking for is that as this move was going up last week, and for the first time we actually closed on a weekly basis really strong, up in the 40s. My impression was that the Friday was so ugly, that was this past Friday, that there was a really good chance, under the circumstances that I've looked at, really serious lows over the many years that decades that I've been doing this, that there'd be some kind of a rally, even if it's just an oversold rally, and that volatility index, if it spikes up on, this is a weekly chart, so if it spikes up on Monday very sharply, then starts to pull back, that we could get a pretty good rally. Well, with that in mind, and you can see here on the monthly chart, I've got the same thing on the volatility index. The spikes don't last very long.
No.
In fact, they have long wicks because they have a huge move to the upside. I mean, this one I could go back even further. This one's going back right there. It's Greece. I don't think anybody remembers the Greece crisis back in August of 2011. Yeah. But each time it would spike very sharply soon afterwards, sometimes immediately. So my thinking was that on a purely technical basis, there was a really good chance that we would get that spike. Well, the rally of 1,300, 1,400 points in the futures and then in the Dow this morning, that to me, maybe it did everything that I wanted, but it did it in an hour instead of over a couple of days. So in that particular regard, we went long the Dow, and that failed. So I'll explain what I'm now looking at, because this is a very good indication that something's going on that we need to be very, very observant of.
Yeah. I have a question, Basil. Can you hear me?
Yes.
Okay. So I took out a call in the VIX, right? And really I was looking kind of I don't really want to hold it to expiration, but I see the incoming kind of volatility, right? And I was looking to kind of get in before it was really ramping up today. When you get this rapid deflation very quickly, right? I mean, it's not like this kind of moves this
price.
What's that now?
The deflation of price.
Right.
Yes.
Right. How, my point being is I'm really thinking of kind of taking profits because the percent gain is so high right now. I mean, are you seeing any further kind of volatility at these levels? I mean, can you get just really major movements to the downside and not really have these major tick ups? I mean, do these charts indicate anything to you on that?
Yes. So that's what I was talking about this past Friday. It's one
Yeah.
of the first Fridays that we've actually closed as strong as this. And that said, there was a really good chance that Monday could be a climactic turn. Oops, got a break coming up.
Yeah. Well,
all right.
yeah, Basil, stay right there, folks. We'll be right back with Basil after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman. Basil, before we went to the break, we were looking at the VIX.
So, Jacob, this is one of the things that I would consider.
Yeah.
Here's the VIX daily on the left. This is a daily chart, and this is the weekly chart in the middle, and the monthly chart on the right. As it stands now, with the Dow down 371 when it was trading 1,300, 1,400 points earlier, that is a sign that says whatever was going on for the reversal is just now completely negated. So let's just put that aside.
Yeah.
But this is the concern. Your question is pertinent to, do I buy or do I hold? What should I do? So my answer to you is, if you have call options, one of the things that I always consider, and we've done this with subscribers, I always say you want to stay in the game. So you must take some profits when you can. Dave White used a wonderful expression, take it when you can, not when you have to.
Yeah.
And I would just take something to reward yourself, pat yourself on the back in a physical way by taking something off, and then have your core position the way you entered it, and then have maybe another one or two, if you have the choice, to be able to raise them with a trading stop. Now, overnight, if this continues, this volatility index could really go right through the 60.17 high of yesterday.
Totally.
So in that particular instance, you've got your core position. If you've got options, I don't know if you're able to trade your options overnight, but then that means you could take maybe a little bit more off, but keep something so that you're in the game all the way through. Because what you've got now, look, here's the bonds. This is the daily chart of the bonds. Look, it made that fourth highest peak that we always look at for the in the Chapman wave. Objective is to go to 4 higher peaks, peak D, and then you must assess. Look at this slide. This is telling you, and last week when we spoke, you said, I think bonds are breaking out in the shorter term. This is the first time that the markets come down in a long time, and bonds, the old safety thing that people used to talk about, which didn't work for a couple of years, is working because money's going into the bonds. All of a sudden, look, you're going from 122 down to 116. That's serious stuff.
Totally.
And the other thing is, when you're looking at this, you've got other areas that should be rallying, just at least having a bit of a breather, like the Russell 2000. And the Russell 2000 was up at 185 earlier today, and now it's down at 174, almost back to the low of yesterday. So areas that, and the other thing is gold. Gold is down from the high of today. It had a very nice move of 50-something points, but it made that 32.01 high on the second, and it's come straight down. So I always look at gold as the geopolitical economic safety haven, and it's not working right now.
No.
So things are very different. There's a concern, and I think it's China. I think that China is going to, give quite a bit of, give back a little to Trump. They're not going to give in very, very easily. That's the way it looks right now, and I think that that's the big thing. And that's why I'm saying to you, reward yourself by, in something like the volatility index, take something off, and have maybe the core, and then have another position that's like a trading stop going into the close. But in this particular instance, the patterns that we're looking for, especially if I go back to the Dow, this should have been a V-shaped rally that at least went to the gap of just a few days ago up into the 40,000 area. So this is very disturbing to me, because you had that huge, one of the highest volatility index readings in a long time, should have had an automatic signal that said a low, not necessarily the low, but a low was made yesterday morning, and now we should be moving higher. There was every opportunity to do it, and that failed. And when I see a failure like that, I say something's different, something's wrong. And therefore and we've raised a tremendous amount of cash from subscribers from opening call. As I say, we did have attempts this morning. That didn't work. Yesterday, we actually bought almost the very low of the Dow, an aggressive position, UDOW, and it actually worked out. We made a little bit of money, and then it took us out. And if we had held that position, we would have had a huge cushion because it was almost at the lows yesterday, and there was a huge move up. So timing, I think, is really important, and it's trying to get the extremes of the market that gives you a little bit of a cushion. And that's the reason why I always try to get the lows of the highs. We were fortunate we did get the Dow short near the high and the S&P near the high, ran it down, took profits on the way down, got out of it this morning completely, that was a mistake, but it was a really good gain.
Yeah, no,
Needed
definitely.
to take that. But the most important thing right now is a market failure that had all the specs that certainly I look for as a pretty serious multi-day, even sometimes a multi-week rally, has not held. The day is young. We haven't taken out yesterday's low, but that is not something that I like. This is something that makes me really cautious. And as I say, we've got money to put to work. We're just waiting for the right time to, and we'll step in different areas. Even look, U.S. Steel suddenly had this spectacular move yesterday, and the SLX, the steel index, didn't really move very much. Look at this. Here's U.S. Steel, but mostly it's a takeover candidate. But you've got these isolated big spikes to the upside. So I'm looking at this and I'm saying I don't feel like there's a whole sector that's moving strongly. It's like individual stocks, and I would prefer to see at this particular time a sector saying, hey, that's a favorite sector. I don't see anything that says, buy me, buy me. It says, you can buy me, but you better be real careful. So this is tentative moment in the market. This give back today is something that disturbs me a lot.
No, definitely. And I mean, steel was what, I have a whole kind of portfolio that I'm working, a watch list at least, right, of, what happens if we start trying to reindustrialize in a way, right?
Right.
Even sectors that are obviously going to get exposed to tariffs, right? And so U.S. kind of companies that produce that, let's say steel, for instance, might catch a bid. Yep. You've seen none of that. I mean, Steel Dynamics.
Aluminum, steel.
Yeah.
It just the thing is, it doesn't happen overnight. It's a process.
Sure.
It takes quite a while to implement.
Yeah, absolutely. It's just I think I think the market is scared in a way. Exactly what we were talking about. You're finally starting to see some fear and capital coming out of equities flowing back into the 10-year. You're getting yield suppression that way, and now we're nearly right back to where we started. I mean, I think you're very close to 4.3% in the 10-year. So the question is, where is this kind of capital going right now? And I think it's I mean, same as you. I'm in just cash right now, and I'm ready to deploy, but I haven't seen any strength. I've seen the optimism still there, right? For for the bulls to want to get back in and snap this rally up, but it just can't sustain itself. It seems like.
It's not the one-off. You want sequential highs. In other words, it's really the weekly charts that need to start making higher highs and hold it for a week or two or three. Haven't been able to do that. A pattern that I look at all the time is this pattern that I call the dreaded H.
Yep.
Comes down sharply, arches over, fails at a peak A or a B, takes out the left side low, and you can see that. I mean, look, here's the Dow chart, INDU. Look, there it is, arching over. Right there's your dreaded H, took it right out. Here's the larger arch. But you know what's interesting is the monthly charts are still very strong. The 9-period moving average, that is the 9-period moving average, is way above the 14. Either we're going to be going down for quite a while or we're going to have some decent turn, hopefully very soon.
Basil, thank you so much for coming on. Looking forward to see you at 10 a.m. Eastern time tomorrow, okay?
Thank you very much, Jacob. Have a good evening.
You too. Folks, check out Opening Call Newsletter. Now is the best time. Stay right there. I'll be right back.